Welcome to VTube. Today we are going to discuss about how to pitch your business to VCs, investors, or for that matter even angel investors or for seed funding. So a guide to business funding. Now why do we need a guide to business funding? You may think that you already have a business idea. The idea sounds good to you, to your team, to your family, friends. You have thought through it, maybe discussed even the minute of details. Then why so fuss about how to pitch the business? If the idea is good, the funding should happen. You should not really worry about how to make a presentation, what to say to the investors, how to say it and how much to say it. But let's look at some numbers and let's look at some data. Now, for instance, Silicon Valley. Silicon Valley is the preferred destination for startups, for VCs and for investors. Now, in Silicon Valley, only 1 out of 300 funding pitches get funding from VCs. Only 1 out of 300. So what about the other 299? Were those 299 bad business ideas? I believe they were not. And even some of those 299 might have been better than the one plan, the one pitch that got funding. So where did those 299 business plans or pitches or presentations go wrong? That is what we will discuss today. That when you approach a VC, when you go for a VC roundtable, a conference, when you meet an investor, what should you talk about? How should you talk about it? And how much should you talk about it? Now, as a disclaimer, this is not the only way to pitch your business. There would be several others. Some may be better than this, some may not. But this is one of those templates or one of these ways that would work for you if you have to approach a VC for a funding for your startup or for your existing business. Some facts. Now, first-time entrepreneurs struggle to get their funding presentation right. And that is why we are here to discuss how to make the presentation and what should be included in the presentation. Now, this presentation, it's specifically targeted at Indian businesses, Indian entrepreneurs. Helps to solve that problem. Now, we will discuss a live example as well. Once we go through the template, we will also have a live example to show you how each slide would appear for your business. Now, this deck can also be used by entrepreneurs to reflect on their own business. So you can even run this presentation through your own team, or once you've prepared it, you can look at the presentation as an investor or as an external analyst, and that would give you more insights and more questions that you could answer before you even face a VC or an investor. Volunteer to be test driven. That's what I meant. Once you prepare the presentation, run through the presentation for yourself and for your team. Now remember, this is not the only way, as I said, to make a funding pitch. So now we start the template here. The first slide obviously would be, what's your business name? So state your business, service, product and platform name clearly. Now again, mention your company's name only if required. Now for some businesses, especially the online ventures, e-commerce stores, the name in itself has an IP rights. The name itself could help consumers come to your website. They get curious once they get to know the name of the business. So if that's the kind of business that you are in, you may want to save the name for some while and not mention the clear name or the brand name in the presentation. State a tagline. Now, tagline is something that defines your business. For Nike, it's just do it. So that's the tagline. So only if you really know what your business is about, if you're 100% sure, or it's an existing and established tagline. Else, you risk creating an impression about your business that may spook the investor's image and may start the entire discussion with a debate, because your business is new, your idea is new, you have not yet established a brand. So one tagline, which is usually a 3-word or a 4-word combination, can give an image, can give an impression which may or may not relate to your business idea. So if the VC starts the discussion with a particular image or an impression about your business, and if it does not turn out to be what he initially thought, then you are in for trouble. Let's look for an example. Now this is a Nike, as I said, just do it. Now how do you think investors or VCs or target customers even would react to this if this was the tagline for a new startup, for your business. Now we relate to Just Do It, and it's considered as one of the best taglines ever because it's for Nike. It's an established business, and Nike has invested a lot in marketing, in advertising campaigns to make the tagline popular. So now when somebody says just do it, you think about Nike. But if it was a new business, if it was not Nike, what would you understand from a tagline, just do it? It's vague, and this would not create the right impression if you're trying to impress a VC or an investor. So what does this tagline mean, and what is it trying to convey? It's ambiguous, it's not clear, it's vague. So be careful about using taglines at the start of your presentation. Now, taglines, why startups need to be careful? Because it cannot be vague, it cannot be ambiguous. So good business taglines are difficult to write. Along with working on your business plan, developing the product and services, at the start of your business, you're not well versed with advertising strategies, marketing strategies, and you may not be well equipped to write a very impressive tagline. Now, tech startups, which normally are the trend of the day, have a twofold challenge. Why? Because one, tagline needs to be creative, unique, they're difficult to write, and again, as a tech startup, you have to explain the technical advantages in a simple, jargon-free message, and that might be difficult if you have to explain the entire message or the entire business idea in a 3-word or a 4-word combination. So if this is where you are, you need to stay clear of taglines at the start of your presentation or while pitching your business to a VC or an investor. Now, where do startups go wrong? If you must have a tagline, let's discuss where you could go wrong. Now, startup taglines often try too hard to conform to the conventional 3-word length format. Just do it. So you also want to have a tagline just 3 or 4 words long, but it's difficult to capture the idea of your business in just 3 words, especially if it's a startup. Now first, that's not easy to do with a product or service that nobody knows about. Nike, I know about. Apple, I know what's Apple. Google, I know what's Google. Your business is new. As a VC and as an investor, I would hear about your business, your idea, your team for the very first time. Now second, it's pretty likely that your tagline will end up using some of the same verbs and adjectives as your competitors. So how unique would that be? And you want to create a unique impression about your business venture. So if you include a tagline, we have a few suggestions for you. Just roughly, we'll take you through it. The tagline must be unique. As mentioned in the earlier slide, it has to give a very unique image. So if your competitor could just as easily use your tagline, then you can understand that the words that you have used are way too generic. Make it concise. Think about some of the best taglines, as we have BMW, the ultimate driving machine. It says a lot about the company's image. Or Apple, think different. Apple has always been innovative. So they have a tagline called think different. So your tagline doesn't have to be that concise. It could be a bit longer as well, but it must explain exactly what you do in as few words as possible. Keep it consistent. The message should be consistent all across the brand, not just the tagline, even the logo as well. So regularly changing your tagline can cause confusion and can keep your customers from identifying who you really are as a business. Now focus on your audience. Your tagline must be easily understood by your target segment. If you're into the mass market, you cannot have a tagline for the niche customers. Integrate it with your other branding. As I said, logo and tagline and other merchandise together make the entire brand. A logo isn't your brand in itself. It's one part of it. So a tagline can help define and work to support your brand and logo and product and position it much better. Keep it positive and appropriate. You want to stay away from a negative tagline or something that can create a contradiction or a confusion. That brings us to benefit lines. Now, what are benefit lines? Benefit line is a very new trend. So it talks about what does your business do, for whom, and how. Now, benefit lines are more descriptive. You can use more words and more sentences in making a benefit line, and that makes it easier for you to describe your business in more words, in more sentences, or in more phrases. But try and keep the benefit line really crisp. You don't really want a long paragraph which nobody would like to read. So here we have some examples for tech startups. Now Facebook says that Facebook helps you connect and share with the people in your life. It explains what the brand or the business or the entire social media is all about. Twitter says find out what's happening right now with the people and organizations you care about. So you get minute by minute updates of people you follow. This is self-explanatory. LinkedIn. Over 150 million professionals use LinkedIn to exchange information, ideas and opportunities. So if I'm a new business professional, I already know that 150 million people across the world are using LinkedIn. So there is something good about the brand and this could be helpful for me as well. So it invites me to use the brand, to use the product or to use the service. But benefit lines. Today, brands sell utility and usefulness. It's all about how you can solve a customer's problem. So benefit lines explain that much better than what a tagline would. Taglines are easy to remember because they are short, but benefit lines provide a better explanation about your product. Now, benefit lines help explain and gently propose what the brand could do for its customers. So they are more genuine rather than being ambiguous or vague compared to a tagline. Benefit lines also have zero risk. How? Now, it's a simple statement of intent and usefulness that can be changed easily. Facebook can go ahead and change that benefit line, say in a couple of months. Nike would think 1,000 times before changing the 3 words, just do it. And as I said earlier, benefit lines are easy to write because they are more subjective, have more words and phrases. So, but for a benefit line, only say what you do. Don't say what you may do. Don't say what you do to plan to do in future or services that are yet to be launched. Only talk about things that you do and never say what you cannot do. This is a favorite for advertising professionals and agencies, but stay away from this. So now here we have an example of the problem statement. Now this is a healthcare startup which caters to senior citizens, elders. So what is the problem that this startup is addressing? Now what they say is that there is an increasing trend of nuclear families and lucrative job or business opportunities abroad or in metros, and that has forced aging parents to live alone and away from the children. So now this is what the startup is trying to address. Senior citizens living alone do not have easy access to health and personal care services. So this is a cause of worry for elderly parents and also the children. And this is what this startup is trying to launch a service to address the accessibility issue and provide better healthcare services and personal care services. Another example, now this is a third-party computer tech support provider. Now what customer problem are they trying to solve? Now they say it's a pretty long problem statement, but it explains the entire business problem. Now over the past few decades, computers have become an integral part of our lives, which is very obvious. The popularity and advantages of internet, new technology and social networking has further increased the penetration of computers. It is estimated that there are over 2.5 billion internet users in the world. So here they also give a magnitude of how many people use internet across the world. Now, regular use of computers, internet and technology often results in tech problems and requires maintenance and support. Now, very few users are equipped with the tools and know-how of resolving most or all technical issues. Now, visiting a computer repair workshop or waiting for a technician to come to your home or office is neither cost-effective nor time-saving. So this has resulted in the growing popularity of third-party on-demand technical support companies via telephone, via emails or live chat. So here they have a problem statement of why they want to start a third-party tech support company. So the problem statement, you should try and include the following. How many buyers do you have? Estimated buyers, of course, because it's a new business, in terms of numbers and if possible in terms of revenue, dollars. How painful is it to the market? And how is the problem dealt with today? Who are the competitors or what are the substitutes that your target customer segment can use instead of using your product or your service? Now, after the problem, you have to talk about your insights on how you want to solve the customer problem or the great pain that you have identified. So powerfully and crisply explain how you have thought through a solution of this big pain point that you have discovered. If you want to give easy accessibility to healthcare services, how do you plan to do that? If you have a third-party tech support company, how do you want to address the technical issues that customers would face? Now, this will probably be the most important slide because the problem identified and solution found should be business worthy enough to proceed from here on. It should be worthy enough for the VC or the investor to stay attentive throughout the presentation and plan or help them decide whether they would really want to fund your business or not. Now, what's your solution? What should it have? It should have the basics of your proposed solution. How will it work? What are the various services, product categories, basic unique advantage? Why would be you unique? Why would you stand out from your competition? And what's new in the solution that nobody else as of now is offering to the customers? Now, define the scale and timeline of the advantage. So demonstrate your company's value proposition to make the customer's life better. How do you plan to make it easy for the customer? Show where your product physically sits and provide use cases. If you have some prototypes, if you have made some pilot runs, talk about them. Unique advantages could be intellectual property rights, a new software maybe, unique processes, a different supply chain process maybe, unique relationships, unique go-to-market advantage, how would you market or how would you advertise, and sustainable price point advantages. This is very important for a startup to enter into a market. Give a price point advantage to your customers. Now we come to a visual reference. If possible, you should include this because at this stage, it would be great if you show the problem and the solution visually. So if your startup is a website, if it's an app, then set up a live link so that you can present directly to the VCs or the investors if required. Investors like to see the solution just as much as they can imagine it. Seeing it something helps them understand the solution and the plan much better. This also sets the stage to prove that you have a prototype built out already. This gives more confidence to the VCs. Now your business proposition, what makes you unique, what makes you different, what makes the plan an exciting venture to go into. So describe crisply at a high level what is your business proposition and what will you offer, to whom will you offer, why, for what, and the benefits of doing so for you. You've already mentioned about what the customers will get out of the business, but what is the benefit for you to start this business? What is the motivation for you to start this particular venture? Now, how does your business work? A very important slide again. So in simple language, explain the process of how do you wish a plan to execute the entire business process. Use a flow chart, a logical sequence of screens, or even maybe a live example. But only if you're very confident of the live example or streaming working. Why won't it work? Because internet connections may fail, or VCs may not be able to connect to the Wi-Fi setups, websites may not respond when you require, and many other reasons. So it's best to leave live examples for later, but go ahead with it if you have everything in place and you're confident that the live example will go as planned and as scheduled. Now, do you have a proof of traction? Have you had any pilot runs? If any, then talk about it. If there is any proof of early success, any customers that have paid for it, talk about the audience growth, customers using the service, their testimonials, their feedback, brands that have signed up for your company, and clients who have already paid. This again boosts the confidence of VCs, investors, and even new customers. Now, what is the market size and potential? You have an idea, you have identified the problem, but the market size should be substantial enough for somebody to invest funds into your business plan. So what is the market opportunity and how large is the market for your solution to be sustainable? Describe your vision of the long-term market 3 years from now, 5 years from now, and how and why your solution will remain relevant in the next 3 to 5 years. Simply said, your concept should be forward looking, not backward thinking. You cannot start something because some other business that started 2 years ago is now a big success. What is the relevance of the idea 3 years from now? It should be forward looking. Market size. Identify the current and expected customers in terms of numbers. What is the average cost to your company for a product like yours? How much would you invest in terms of money, resources and time to develop the product? And what are the trends, opportunities and threats basis the past couple of years, or maybe past 6 months, or maybe a 1 quarter, but have some numbers in place. Again, we have the example of the same business startup, the third-party tech support. So how do they explain their market size and potential? So computers have exploded throughout the world over the past 40 years, from 2,000 units shipped in 1960 to over 15 million units per year by 2003. So they've shown the increase in number of computers being manufactured from 2,000 a year to over 15 million units every year. So with this rapid growth, there has been a corresponding increase in the need for computer support services. Now, average downtime based on computer issues cost companies 3.6% of annual revenue. So to give you a magnitude of the cost that companies have to lose in terms of issues with the computers and technical problems. So showing that the market to fix computer issues is large and valuable. One, because 15 million units are being shipped every year, and because companies lose 3.6% of their annual revenue because of downtime and technical issues. So now they have talked about the number of computers being shipped per year. They have talked about that companies lose 3.6% of revenue. Now let's look at the number of providers. So in 2008, the computer maintenance and repair industry consisted of 14,735 firms, which generated $4.17 billion in revenue. 90% of the firms in the industry employed 5 or fewer employees. However, only 1/4 of these firms were businesses who had maintenance and repair as the only service for the customers. Now, the home PC repair end of this business, of the industry, began to be fully realized only in the last few years, and that is why they feel, because of the magnitude and the trend, that their business idea of the startup is relevant and sustainable for the next few years, and it's worth funding and worth investing. Now we come to competition mapping. Now here you have to explain boldly, without fear, who is your competition, what they do, and how ahead or near of are they to you, who has funded them, and has there been any acquisitions in this space. So do you know your industry segment pretty well? Talk about that here. Clearly state how different you are from your competition. Now your competition, who is your competition? Anything that hinders sale for your business is your competition. So how else can prospective buyers fix their problems and find satisfaction? Your competitor's solution is one way of doing it. Build it in-house. Customers who are savvy enough can build a solution for them in-house because it is not available elsewhere. They may just choose to wait, pretend it does not exist, just ignore the problem and live with it. It happens. Deflect the problem to a supplier. In a B2B market, it's pretty easily done. Or ask their present solutions provider to adapt to a temporary solution. So once again, anything that would hinder sales for your business should be treated as a competition, and you must talk about it and factor it, if not in the pitch, at least in your business plan. Now go to the market plan. So you have an idea, you have identified the problem statement, you have a solution, a very unique value proposition, you know the competition, but how do you plan to go to market? How do you plan to go to customers? How do you plan to promote your business? And how do you plan to get paying customers for your product or service? So how will you go to market? What will be your strategy? Marketing, advertising? Who will you go to and how? Who is your target segment? Who are the preferred vendors, suppliers? It's best to show a literal 120 to 180 day plan that clearly bullets out the most important tasks and steps that you will achieve in your rollout for the entire go-to-market strategy. Now, what is the core strategy of your business? So without any hocus pocus of fancy words or charts or presentations, just explain the no-brainer reason why your business will succeed. Even a child should be able to understand of why you are so confident about your business plan working and going on to become a success. The investor reading this slide should say that, oh yeah, this makes so much sense to go ahead with, to implement the plan, and he should be feeling confident after you explain what's the core strategy of your business. Financial modeling, another important aspect. It's important to discuss how to think of revenue modeling. Now here, only talk about how would you earn revenue. Don't try to get into details of how much revenue you will make here. The investor needs to understand that you get the model right. They assume scale will apply itself. They just want to make sure that you know how would you get revenues from your customers, how will the customers pay for it, and then they would talk about the scale maybe at a later stage. Now, having said this, have a clear understanding how large a business can ever become in terms of revenue top line, because VCs may ask, how large can this become? $1 million business or a $10 million business or maybe a $1 billion enterprise? So how large could the business become? What does it have in store in future? Now, why have you come to the VC? What is that you are really looking for? The basic responsibility, the basic requirement is funds. It's usually the money, so simply state it. You cannot be shy about it. You don't have to hide it because even the VCs know that's what you have come there for. But do you want something apart from the money factor? If it's relationships, partnerships with portfolio companies or vendors or supplier network or technology assistance, ask here. Tell them that what is that you require from the VCs or the panel. Now, financials. What should that include? Money that you need to succeed, planned use of funds, major milestones, a high-level 3 to 5 year financial projections up on the costs, on the sale, revenue, net profit, gross margin, and a possible exit scenario and returns for the people or the firms that would invest in your business plan. How do you plan for them to have a successful exit, say 3 years from now or 5 years from now, or when they really wish to exit the venture? Cash flows. Dimension the cost of doing business that you want to build here. Take an 18, 24 or 36-month window and detail the costs, the capital expenditures as well as the profit and loss statement. Not the revenues, to demonstrate what will it take to build the business, where and how much do you need to invest and spend to build the business that you have planned so far. Now please factor in some survival salaries for yourself and your partners. Even as co-founders, you need salaries to exist, so please factor your salaries as well. Revenues and scale. If you have a clear vision, try and tabulate a simple table to understand revenue projection. Just show what is the expected cost, revenues, gross margin, net profit, but exclude calculations like depreciation. That complicates the entire calculation. It immediately sends a wrong signal to the investor that this is a silly academic exercise. Now again, we come to the same startup, the third-party tech support. We have a sample financial model for them here. They have a 3-year projection, year 1, year 2, year 3. So they have sales, how much they wish to earn through sales. So from some $500,000 in the first year, they would move on to 6.2 million in year 3. Total cost of sales, how much do they need to invest to get that number which they have in the first column? What will be the gross margin percentages? What are the operating expenses, taxes, and the net profit? So year 1, they show a net profit and estimated a forecast of 12.46%, which increases in 3 years to come to 25.17%. So a simple table terms that everyone would understand. They have numbers, they have percentages, so it gives a fair idea that you have thought through it, you have a calculation, and how much the VC or the investor could expect the business to get them to net in year 3 or say year 5 if you do have a 5-year projection. Now we'll talk about threats and weaknesses. What could cause your business to cease or lose or become a failure? So can you be bold in detailing what could really kill your business? So what is your darkest nightmare that could come true? What could go against all the planning and strategies that you have made? So what are your weaknesses as a member of the team and the team as a whole? So it reassures the investor. When you talk about your threats and weaknesses, it reassures them that you have thought with pessimism as well as much as with optimism, and also saves him or her the time and energy from finding loopholes and pitfalls, because you yourself present the loopholes and pitfalls in the presentation. You do not have to think about what could possibly kill your customer or what could possibly go wrong and against your business plan. Now, what could be or what you think would be the outcome of the business? So what do you expect your business to become, again, say in 3 years or 5 years or in 2 years or even in 6 months maybe? Now, VCs would like to hear realistic ideas of who will buy your business and why. If you plan an acquisition in the future, then talk about it. If you think it's an IPO stuff, then prove the companies in your industry who have already been listed once they had started up, and maybe in 3 years' time, maybe in 10 years' time, if there are any. But that will show that you have done some research and will give some backing up when you say that your business plan or your startup could be an IPO stuff in the years to come. Now, again, include some information about who is behind the plan. Talk about the founders and the entire business team. Now, this is usually presented last. Some people like to have it in the very first slide or before they even start talking about the venture. But the reason to keep this last is that in the first few minutes itself, the entrepreneurs and investors often discuss what each of them have been up to or done in the past. Before you start in front of the audience and explain your plan, you would meet them and you would talk about yourself and your team. So it does not make sense to immediately start the presentation and again talk about yourself. So it's advisable to save this slide for the last slide or maybe at a later stage in the presentation. So please keep the points interesting and relevant. Nobody wants a resume or a biodata in this slide. Be crisp and highlight the strong points of why someone is a part of the founding or the initial project and business team. Now, did you have these questions in mind? This is more of an FAQ or a Q&A session where after somebody would go through the entire pitch and presentation, it's obvious they would have some questions. So try to mention some mock questions that may further explain the pitch better. Also, if a couple of investors, if you've already presented this pitch earlier to some VCs and they might have asked you some questions, include them here. So if a couple of investors ask you questions, it is safe to assume that others that you will meet in future will probably ask you the same questions again. So add these here as you go along your pitch process from one conference to another, from one meeting to another. So that's it. And the thank you slide, this is more of an end to the template. So not a very good idea to discuss valuations. You talk about cost, financial models, revenue, scale, but don't talk about valuations or how much equity do you plan to give to the investors. Save it for a later stage. Investors want to think about the plan, discuss and come back with a conversation. So keep things open, keep ideas open so that when they come back to you with an interest in the plan, then talk about equity, dilution and valuations. Now here we have a guideline. Remember PSUCF. This more of describes in a nutshell what the pitch should include. Now P stands for problem. So as per you, as per your research and findings and surveys, how big and painful is the problem to your customer segment? Solution, clear and a very unique solution. Unique advantages, your team, go-to-market, distribution policies, intellectual property rights, etc. Competition, what are the other options that as a buyer your customer may or does have? And financials, your needs, how would you plan to use the funds, risk versus return. Now, there are 5 growth stages for a startup. As a startup, once you get into market, once you start and establish a business, there are 5 growth stages that your business will go through. So your business pitch at some point of time, not individual dedicated slides, but at some point of time, your business plan or pitch should address some, at least all of them, maybe briefly, but surely. Stage 1 is existence. Stage 2 is survival of the business. Stage 3 is how your business will succeed. Stage 4 is takeoff. And stage 5 is maturity of the business and the resources. So existence, what does it say? Can we get enough customers? That's the first question that you would ask yourself as an entrepreneur. That's the question for existence of your business and your team. Can we get enough customers? Can we grow into a viable business? This is why somebody will give you funds and invest in it. Can you grow into a viable business? Can we expand from one customer or one product and add more customers and more products and keep on doing that? Survival. Can we reach break even? We have invested, we have got funds. Can we reach a point when we say that, okay, we have reached break even? Can we stay in business? We've started, we were energetic, optimistic, but over a period of time, 6 months, do we still think or are we confident that we can stay in business for longer? Can we grow? Success, how would you stabilize? So how would you enjoy the riches generated and your current lifestyle? How would you expand, reinvest earnings into the firm, incur more risks to maybe grow faster, and work towards a bigger upside? Takeoff, can you delegate responsibilities? Will there be enough cash to generate the demands and manage risks that growth brings? As you grow, there will be more demands, more risks. So how do you manage those risks and how do you mitigate the risks? Maturity, how do you plan to consolidate, to develop efficiency and improve profitability? So work to retain the advantage of a small firm. As you grow, you would add more people, more resources, so more fat to your business. So how do you plan to retain the advantages that you once had as a startup and as a small firm? How do you plan to stay flexible? How do you plan to stay creative? How do you plan to maintain the spirit of an entrepreneur? How do you want to avoid the entire red tape that a large organization or an enterprise may develop over time?